And then think of this, your bank account gets to stop scaring you. So I think almost everyone here has gone through the same feeling I have. There was a moment in time where I would just go through um like overdraft fees. And I remember like, dude, how much I'm already overdrafting and now there's a fee on top of overdraft. Like I'm already negative. What do you guys want from me? So I think everybody has gone through this before where there's that little pit in your stomach right before you open up the bank account app and you're like, for a half a second, you're like, all right, what's this number looking like? How many overdraft fees? I'm already negative. Where are we sitting right now? And the way that sometimes you just don't look because it's easier to not know. And I want you guys to go back to those things you wrote down yourself a year from today. You pick up your phone, you open your app, and there's like no pit in your stomach. You're not bracing yourself. You just look and the bills are paid. Bills are paid, card is cleared. You don't even think about it. And there's even money sitting in a savings account. Like, this is what I want you guys to get a feel for. This is the feeling that I want you guys to get excited for and to start manifesting. I know if some of you guys think that manifesting is cheesy, look up the science behind it before you knock it. Like, there is actual science behind it. It is just the chemicals in your brain and thinking of something enough. I won't get into it. Look it up. But this is just for the people that think it's a little bit goofy or a little bit fluffy. Now, let's say that you took your kid to the doctor's at 11 a.m. You didn't have to email anyone about it. You went to your friend's wedding on a Wednesday. You drove your mom to her appointment without checking the calendar first. Your time belongs to you now. You became a trader and no one can take that from you. So when you learn this skill, this is the coolest part. Like, nobody can fire you. Nobody can tell you where you need to be at what time. Like, this skill is yours forever. It's one of the cool. That's why I feel like I'm a Mormon here. I'm just preaching. Like, there is that nobody can take this from you. And I promise you guys, I'll find another analogy. I'm working on it. But what's wild is that none of that happened because you got lucky. It happened because exactly a year ago, you decided to learn a skill. And now that's just who you are. You're a trader. The market doesn't care about your background, about your degree, where you came from, your prerequisites. The market rewards those who can read and execute correctly. If you can look at the charts, do your top down analysis. Ellis says I'm a Mormon, by the way. Hey, Ellis. I wish I knew much about Mormonism, but I don't. But the markets reward those who can actually analyze the charts. They can do their top down analysis. They can spot an entry, manage a trade, and exit properly. And now you're going to have those skills. A year from now, you've decided, you've already committed. That's the skill that you get to keep forever. No boss that can fire you, no economy that's going to take that from you. Now, if you guys stay until the very end, though, I know we had a little bit of a late start. I was working on some technical difficulties. But if you guys stay until the very end, I do have a special gift for you. One is going to be the Trendline Traders Playbook. This playbook gives you a clear guide and understanding of the strategy that I'm going to be sharing with you guys today. Next thing, I'm going to be selecting 5 random people that have stayed through the entire class tonight to qualify to win a free prop firm account. So if you guys have your phone on you and you're watching from the computer, scan this QR code to be entered into the selection. We're giving away 5. 5. Yes, Jessica. So go ahead, take a screenshot. Take a little, snapshot. All right, we're moving on in 5, 4, 3, 2. There we go. Okay, now, if I give you guys this gift, there is a small favor that I need in return from you. Today, I'm going to share with you guys what I believe to be the best opportunity for people. I really do, because there is nothing that you need. You don't have to look good. You don't have to be smart. You don't need to be an intern on Wall Street. I'm very, very passionate about this because I have been there. Wasn't that smart. I mean, I'll get into kind of my story a little bit in a moment, but today I want to share with you guys what I believe to be the best opportunity for people like you to earn an additional source of income. Now, I want you guys to take a look at this chart. 1, look at the gray line here. You can see the gray line. If you were to take on a traditional side hustle, maybe it's Uber Eats, freelancing, whatever it may be, your income is tied directly to your time. When you make money, you got to put time in to get it. So it's tied directly to that. If you were to work hard enough to make a consistent extra, maybe $500 every single month, by the end of the year, you'll have made $6,000. If you want to make $12,000, you have to, simply, if the amount of time that you put in equals the amount of money, then you just have to work twice as hard, twice as many hours. Now, the green line. This is where if you had a real system, trading can become exciting. This is where you can see that curve actually work in your favor. So with something called prop firms nowadays, which is the lowest barrier to entry. I didn't start with prop firms. I'm not here to try to pitch prop firms to you. It's just the way the industry has shifted. It used to be if you want to day trade stocks, which was the only kind of option for retail traders, you had to have 25K in your account. Nowadays, first of all, that is stripped. I mean, we're in 2026. Getting into trading has the lowest barrier to entry now. You can get into trading with $70, like something as low as like $79, $80, $100 to just simply enter something called a prop firm. And I'll give you guys a little bit of context on that in just a moment. But with the help of prop firms like Alpha here, you don't have to risk your own capital to earn an additional source of income. The percentage of prop firm traders who get funded earn on average an extra $28,000 a year. That is 5 times more than you guys saw on the side hustle that requires labor and actual time. Now, I want you guys to understand that across the entire industry, only 7% of traders actually reach any payout. A majority of them are trading without process or structure or strategy or just discipline. So I'm going to be showing you guys how you can be a part of that 7%. Now, special opportunity. Some of you guys will feel so committed to moving forward that you will want to take advantage of a very special opportunity that I have to share with you guys today. If by the end of this, you've gotten enough value from this masterclass, would it be okay if I took a few minutes to share a special opportunity that my team and I have created to help you put everything into action? If so, if you give me permission, type in fair in the chat. All right, Poppy says fair. That's all I needed. Thank you, Poppy. All right. Okay, then without further ado, shall we? I want to show you guys what's possible in the reality of trading if done right. This industry has a lot of skepticism, a lot. What a very interesting industry we're in, by the way. But this is me. Hi. I have documented and shared my entire journey online, how I went from growing a 5K account to over $500,000. I've shared all my broker statements and all the trades that I've taken. I've done trade breakdowns. I've done it all. I've documented this all on my YouTube and Instagram over the last decade. Now, right now you might be thinking, now if you're here, you're already like, okay, there's something about this that intrigues me that I think I can do. But this nagging thought is always going to come up in your brain. And I just had this conversation with my sister today, who is also trading, which I'll also get into after we get into actual strategy. But right now, some things that you might be thinking. One, that you don't have enough time to trade. Incorrect. Trading, I mean, I won't get into it yet. But you might be thinking you don't have enough time, or it's not the right time for me to learn yet, or I'm worried that trading might not work for me. I want to show you guys some people that have been in the same position. Yes, exactly, Carlos. I'm telling you, it really can be. It's just you've got to commit the time to the process and to learning first, but actually committing to trading and actually doing the trading thing itself does not take that much time. I'm spending such minimal amount of hours. I mean, I'm also doing a higher time frame. I'll get into that a little bit later too. But these people were in the same exact place as you. We've got John over here. JC went from negative $2 to 1.8K in 1 month. We have Lisa over here who did 3.4K in 1 month. We've got Wari who was able to do 1.8K. And then we've got, and I believe that was in one trade. Then we've got Michael who was able to do $8,000 also in just one singular day. So these people were in the same position as you. Then we've also got Justin. We've got Tanya here. So a lot of people in the same exact situation. Yes, Pedro, I'm fired up. Now, they all started in the same place as you with no experience. I want to introduce you guys to Arslan, who is one of the coolest. This is the reason why I'm giving you guys this information first before we get into strategy. One, strategy is simple. It's not going to take that long to learn. Some of you guys won't believe it. It's the strategy that I use today. But the reason why I want to give you guys this background and these stories and this information is because I really do believe that, yes, Ashley, I am selling you something. I'm selling you the vehicle, trading. I think trading really is meant for everyone, and I'm passionate about it, and I understand. I mean, I have been what's it called? I'm the proof of concept, where I started and where I am now. And I'm telling you guys that I was in hair school. I was a beauty school dropout. And I don't know if I'll have enough time to kind of tell you guys my story here, but I'm living proof. And it's usually always the ones who have gone through it that are like, they want to scream it from the rooftops. Like, guys, I used to be here. I'm telling you. And I didn't think that I was qualified or cut out and never even considered trading in my life. And now I'm in the craziest position I've ever been in my life because of this instrument, because of this tool, because of this vehicle, which is trading. But I want to show you guys Arslan here. So I just want you to believe that it's possible first before we get into strategy. It changes everything. It like gets you more excited. It's like a version of like psychology where you are so much more inclined to actually take it seriously and to go forward with it when you get excited and you can actually envision yourself doing it too. So there is strategy behind this, and it's for your own benefit. So I want to show you guys Arslan here. Arslan got a $26,000 payout in 2 weeks. Arslan, I won't spend too much time on this, but just to give you some context, he ended up moving to Dubai, moved his entire family, was working like a tech job that he didn't love, was able to be successful in trading, moved his entire family to Dubai. Yes, so Jordan, Arslan is goated. But the cool part is he did not risk any amount of money of his own capital. So he was taking advantage of the way that the industry has shifted nowadays to funded capital, to a prop firm. Now, how did he do it? He executed one idea consistently, one setup, one strategy, one system. Arslan started exactly where most of you guys are at now. Then he found our system. What is our system? Let's get into it. Okay, now let's actually get into the charts. I believe before we do, I want to give you guys a heads up of like how many traders actually lose money. So there is the 7%, of prop firm traders that make it, but then there is the percentage of traders as a whole. That's personal funded accounts, that's prop accounts, but as a whole, I want to show you guys the statistic here before we get into charts. 90%, yep, you already guessed it. Milo guessed it, Carlos guessed it, Poppy guessed it. You guys already know. 90% of traders lose 90% of their money in the first 90 days. Why? It's not that you're doing the wrong thing, but it's that you're doing too many things. Now, before we get into charts, drop a 1 in the chat if you feel like trading has ever felt overwhelming. Like you have too much. It's not that you've got a simple system, but there's like an absolute overload of information. Okay. And completely valid because I think that's also how the industry has shifted. We're drowning in freaking information these days. Drowning in information. So before I give you guys a strategy to start implementing tonight, I want to do just a quick little analogy that I have for you guys. And this one started way back when in 6th grade. Some of you guys have maybe heard this story before if you have watched one of my most recent YouTube videos that came out. If not, this might be new to you, but this was like the direct correlation to one, winning the science fair. I did. So watch out. Hey, that was that one time in my life that I did feel smart, and it was 6th grade and then it ended there. But this was the only correlation that I could make to trading that I was like, oh my gosh, this makes so much sense. And it was this. In 6th grade, I did the science fair with 3 plants. My hypothesis was just to see which food would make these plants grow faster. And it was like, but it was weird ones. It was like milk and soda. I was like, milk, maybe. It's got like calcium. Maybe plants want it. I don't know. I wasn't that scientific back then. But I wanted to see out of 3 of the same plants, same soil, same sunlight, same environment, same type of soil, same amount of soil, everything. But I wanted to change the type of food that I gave them. So 3 plants, same soil, same sunlight, same everything. One variable was the food: milk, water, and soda. Obviously, I feel like I knew the soda one was going to die, so I was making it easier. I really was just trying to see if milk would work. But imagine if you change the soil, the types of plants, different amounts of light, and different environments. That's what most people are doing with their trading. Trading is this experiment. You need the least amount of variables and you need the most amount of constants. You need everything to be constant. You need all of the different things to be constant. So when you do make a change, it needs to be such a small change, such a very few variables here is the point I'm trying to make. So if you're doing this, Of course, you guys typed in 1 in the chat and that it's overwhelming because you can't even see what's working because you're trying too many things at one time. So the point is to keep the variables. Also, do I have anybody in the team that can take Haley out of the chat, please? If you guys don't see it, thank you. So changing too many things at once is what we need to do. What you're probably doing now. Sorry, flustered brain, ADHD, focus, hyper focus. We're here. Changing too many things at once. You can tell what works. Now, trading is the plant experiment. So the fix to that, yes, what you guys said is the 1-1-1 rule. One instrument, one time frame, and one strategy here. When I committed to this 1-1-1 rule, I was able to do 20K to 100K, and that was my first 6-figure year. So what is the one strategy? The one strategy that my uncle taught me 11 years ago is trend lines. Now we can get into it. And that was good timing too. I know that we had a little bit of a slow start, but for everybody that's getting ready, let's pull up TradingView together. If you don't have it, if you don't, then just follow along. Get up, stretch, take a sip of water. We're about to get into it. So just give me a second. I'm also just hyping myself up. Here we go. And for some of you guys that are joining a little bit late, thank you, Philip. For some of you guys that are joining a little bit late, I did say give me grace today because the brain ain't braining. Had to go sit in a dark, quiet room for many hours today. And it didn't do what I wanted it to do. But we're still here now. So let's get into the charts. Here we go. Opening up TradingView. Also, I am saving some time for Q&A tonight. So, Mohammed, any questions that you guys have, save them for the end. I will be doing a Q&A. Yep, any questions, save them for Abdul, save questions for the Q&A after. Nadir, save questions for the Q&A after. Save them. Right now, I want you guys to focus, hyper mental focus. Fixate on what we're going over now. Give me just a moment. I pulled up TradingView, but I haven't shared it yet. And all right, I've lost the chat. There we go. Okay, let me know if you guys can see the charts now. I have lost the chat. Okay, cool. All right, easy. Now, this is my actual chart markup for Bitcoin. What I'm going to do is I'm going to delete everything that's on the chart, and I want you to do the same. Delete everything. For those of you guys that have been trading before, I want you guys to completely remove everything on your charts, even volume, I want a completely naked chart. So I want you guys to pull up Bitcoin with me. Go to the symbol search up here at the left, BTC USD. You can do the Coinbase or you can pick whichever one you want. And then this is what I want you to do. Hit that trash button on the side, all of it, gone. Remove. I want a completely naked chart. That's where we're going to start. And now we're going to learn something called, give me just a moment. Here we go. We got this. All right. We're going to start with something called top-down analysis. So this is where I would like for you guys to take some notes and just to write some things down and get some steps on paper so that you just remember what to do so that you know what to do. The first thing we're going to start with, and also give me grace, guys, I have gone through this same thing. I have been trading the same strategy for 11 years and have articulated it 500 million times. So sometimes, I don't know if you guys have ever looked at a word so many times to where you're like, well, now it looks weird. I feel like today is one of those days where I'm like, what is going on? So that's where I'm at right now. So just that grace, I need it. Just shine it on me. Just give it to me. Dump it on me. All the grace. So right now we're going to do something called top-down analysis. And what that is or what that means in most of these terms that I'm going to give you guys today is very literal terms. So when I say something like top-down analysis or safety line or action line, these things are very literal. I'm not going to throw some terms at you or some fancy jargon where I'm going to say, we're going to implement the Fibonacci retracement here, and we're going to get a pullback to the upside, bullish movement, bearish movement. I'm just going to give you guys very literal terms. Like I want to explain the mechanics of this so that you can actually understand it instead of just have to memorize vocabulary words. Like I want you to actually understand the mechanics of it. So this top-down analysis, that's what I want you guys to write down if you haven't already. Top-down analysis is the process of analyzing the chart from the top down. Literally what it is. We're going to analyze the price of Bitcoin from the top. And what does the top mean? The top means the highest time frame or the higher time frame. So we're going to start on something called a monthly time frame. That means we want to see everything that the chart has done as a whole, everything. We want to see from start to real-time price action today. And just so you guys know, we're looking at real-time price action. So the price of Bitcoin right now, currently at this very moment, as I'm speaking words out of my mouth, is at 75,709. So this system that we're about to implement, this strategy, is going to be very applicable to what the price of Bitcoin is doing right here, right now, so that you have context in real time. That's why these masterclasses are so powerful. You get to see this be implemented in real time. And that's why it's also done live and is meant to be watched live as well, because this won't be relevant a week from now where the price of Bitcoin is who knows where. So, top-down analysis. We're about to go through the process of analyzing the price of Bitcoin from the top down. Now, what does that look like and how do we do it? We're going to use one tool in TradingView, which is a trend line. This is a trend line based strategy. And trend lines are the foundation of trading itself. Yes, Dove, it's the Ray tool, but if you go over here to the trend line box, so there is a bunch of different trend line tools, lots of different trend line tools over here. We're going to use the Ray tool. If you want to go ahead and highlight it, that is going to be the only tool we use tonight. Over to the left, the trend line toolbox, and then we're using the Ray tool. And now it will keep that tool right here for you. So this is what we're going to be using during our top-down analysis is the Ray tool. This is a trend line here. You have a point A and you have a point B. The point A is the pivot point, and the point B locks in the angle. You're going to be hearing me say point A and point B a lot of times tonight. Now, one thing that I'll also be doing that I probably won't be explaining is just changing the aesthetic of the line. So you've got your trend line here, and then you've got your toolbox to the trend line. I will just be changing colors to make them look prettier. I'll be doing red trend lines and green trend lines, and I also like to have them at a 4 pixel just to make them as thick as possible. So just some little tips and tricks for you while we go through our first top-down analysis. Now, with our top-down analysis, we have some guidelines. We have some rules that we need to follow. I'm going to have you guys write down these 3 rules as we do this together. First rule is every trend line has to connect. So write that one down. Each trend line has to connect to one another. And why? It's because we are truly pulling context. We are tracking the price and what it has done over its entire existence through, I think inception is the right word. Inception? Could be wrong. Also, brain ain't braining. All the way to today. So we are pulling in all information leading all the way up to real-time price action. So every single trend line has to connect to one another. Each higher time frame trend line has to give us context for the lower conception. Thank you, Marina. Close enough. Yes, that is the word I was looking for, not inception. But yeah. Okay, rule number 2. Rule number 1 was every single trend line has to connect. Rule number 2, price cannot intersect. What does that mean? Price cannot have pierced through the trend line or crossed through the trend line. And I'll explain that when we make it all the way down to real-time price action. And I'll explain it all makes sense as to why we made sure price didn't poke through or it didn't intersect. And then rule number 3, we try to capture as many touch points as possible with our trend lines. Now that's just a guideline. It's just like a rule. We try to, but it's not part of, like, we don't have to. We still want to make sure that we're following every trend line connects and price doesn't intersect. But if we can also simultaneously capture as many touch points as possible, so you can do a little asterisk next to the third. But the 2 main rules are capture as many touch points as possible. 2 main rules are price cannot intersect and each line has to connect. Grace, 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 grace. All right, let's get started. Our very first trend line. So when we are starting our top-down analysis, we always start on the monthly time frame. Top, and then we're going to work our way down. We'll go from the monthly, weekly, daily, 4-hour, 1-hour time frame. Jackie and Lucy. Number 3 is capture as many touch points as possible. All right, now drawing our very first trend line. We want to start with the lowest point we see on the screen while still angling upward. So we've got to have some upward degree, some upward movement if this is our very first upward trend line. Now, let's go back through our rules. Try to capture as many touch points as possible. Okay, we got about 3 here. And make sure that the price does not intersect. All right, locking it in. We've got a point A and a point B here. This is our very first trend line. This is the monthly time frame on Bitcoin. Now, if that didn't make sense, we're going to do at least like 20 more lines. So this will start to click as you watch this be implemented in real time. Now, when we're drawing our second trend line, let's go back to our rules, which, thank you, we've got someone that put the rules in the chat here. So when drawing our next trend line, it has to connect. So how do we connect this to the previous trend line? For those of you guys writing notes and you want to put a little definition under the rule of each trend line has to connect, there is a good rule of thumb. To implement that rule, each trend line has a point A and a point B. This one has a point A and a point B. When drawing a new trend line, the previous line's point B is going to be the new point A. Previous point B equals new point A. You can just write that down. So we're coming in with a steeper trend line. Previous point B is new point A. So we've got the point A here. Now, where does the point B go? Where does this go? We're going to go back to our guidelines here. We've got capture as many touch points as possible. Okay, well, how many can I get without price intersecting? Looks like I can only get 2 here. 1, 2. What does it look like to have an incorrect trend line that has intersected? This is incorrect. Price is poked through, it is pierced through, it no longer is valid. There we go. Now we have got a, yes, if you screen record, it's going to take a lot of room on your phone, and we don't recommend it because this is meant to be watched in real time live. All right, we've got a point A, we've got a point B. Each trend line connects to one another. And also, I really would rather you not. I'm not feeling my best today or doing my best today, so thank you. Okay, previous point B equals new point A. We're going to continue to come in steeper. Previous point B, new point A. Try to capture as many touch points as possible. This is as far as we can go. Thank you, Aaron. All right, let's see if do we need to identify the chat? All right, can somebody not see? If you can't see, leave Zoom, come back. Diamond, if you're confused, don't worry. We're going to do at least 20 more of these lines together. So eventually it'll click. Okay, anything else? Your chart looks different. If you have everything on your chart, delete it. You can click on it, hit the delete button. You can go over here, hit the trash can. All right, what else do we got? Okay, cool. Rachel, I think I'll take your advice here on that. I am going to just scoot the chat to the side because my ADHD brain can't handle it. So we're going to keep going. Here we go. Moving on. And actually, I'm going to make this bigger so that you guys can see a little bit clearer. All right, that ought to do it. There we go. Okay, so if that last one didn't make sense to you, I'm going to draw it again. Remember, we have 3 rules we need to abide by. Every trend line has to connect. And my brain is farting. Every trend line has to connect. Previous point B is new point A. Capture as many touch points as possible. And, you know, price can't intersect. If I said that already, sorry. Here we go. Previous point B is new point A. And we're going to keep moving on. Here we go. We just got 1,000 people watching you. No big deal. Okay, we're going to move from the monthly to the weekly time frame. All right, guys, give me 5 seconds. I'm going to go get some water, take a lap. The brain is not braining. I asked you guys to give me some grace. The focus isn't there. Give me 5. I'm going to come right back. Take some water for yourself as well. Stretch, and I'll be right back with you. Give me 2 seconds. We're going to reset, and we're going to be totally fine. We're going to get the brain going. 1 second. Just got to take a lap. Thanks for giving me grace, guys. I apologize. This doesn't happen usually. All right, who's still here? Oh, here. Okay, guys, let's keep it going. Here we go. I'm gonna get us up to speed. I'm gonna minimize the chat because it's just too distracting for me tonight. But I will save some time to do Q&As at the very end. So save your questions for the end, and let's keep it rolling. Okay, here we go. So we are doing our top-down analysis. This needs to be done on every instrument every time you trade something new. There is an incredible significance to this top-down analysis. And as we get closer to real-time price action, it will all make sense here. But as we go through the top-down analysis, we're going to continue to follow these same three rules. Every time you draw a new trend line, just revert back to the rules. Where do I draw my line? Revert back to the rules. So the three rules allows this process to be repeatable so that we can do this same top-down analysis on any instrument. We could go do this on crude oil next. We could do this on gold next. We could do this on Tesla next. We could do this on JBP, GPY, GBP, JPY, any of the Forex pairs. But this top-down analysis can be implemented on any market, on any instrument. But if we follow these rules, it allows us to repeat the process on any instrument. So we're going back through our lines. Now, a few notes as we move through these time frames. So we've got the time frames up at the top. We've got the monthly, the weekly, the daily, the 4-hour, the 1-hour. As we go through to these time frames, on the monthly time frame, this is a very broad view. You're seeing everything that Bitcoin has ever done. Same if you're looking on a monthly time frame on any instrument. It's a very broad view. As you come into the lower time frames, you start to get a little bit more precise. So think of it like you're looking at the price with the magnifying glass. You're coming in a little bit closer with sharper lenses to where now you can see more information. So things start to get a little bit more precise. As you move through those lower time frames, some of your lines are going to look a little bit wonky, and all you'll need to do is just make some small adjustments. So this looks like it was a little bit off. Need to adjust it to here. At one point, this was a little bit off. I think I had it a little bit steeper up on the monthly time frame. So just know that you'll have to make some slight adjustments because you're seeing more information, more data. Excuse me, I just burped a little bit. So point A, point B. Now we're gonna continue to track the price and draw our trend lines on the monthly time frame until we cannot draw anymore, until we can get as close to real-time price action as possible. And again, guys, I do apologize if it's not my best class tonight. My brain isn't making sense of things, and I'm telling you, the best way to give you guys an idea of what I'm going through is I've looked at a word so many times and I'm like, it looks weird now. Now it looks weird. And that's what's going through my brain right now. So as we continue to draw our trend lines and track the price steeper and steeper, we're going to continue to follow those same rules. We still need to get as close to this real-time price action as we can. And in order to do that, we need to come in with yet one more line. The previous trend line's point B is going to be the new point A. Boom, we've got our point A. Point B, we want to try to capture as many touch points as possible, but making sure the price does not intersect. This is as far as we can go. Not much of a difference here from the previous line to this line, but we're still trying to get as close to real-time price action as we can. Now we can come in with our very first downward trend line. So we've got all of the upward trend lines we can draw. Now we need our very first downward trend line. We're going to use the same tool, the ray tool, but the only thing that you'll see me do different is change the color, just so that I can differentiate the upward lines from the downward lines. Now, when drawing our very first downward trend line, it's going to be the opposite of what we did for our first upward trend line. Instead of looking for the lowest point we see on the screen, we're looking for the highest point we see on the screen. And then we just go back to the same rules, okay? Let's try to capture as many touch points as possible without price intersecting. And this is as far as we can go. We've gotten as close to real-time price action as possible for our upward trend lines and our downward trend lines, and that is your indication that we can now move to the next time frame. Now we can continue this top-down analysis. We just marked up trends on the monthly time frame. Not that crazy. If you're a little bit artsy-fartsy, you might have been able to do this very easily. If not, just continue to follow those guidelines that you can fall back on always. Those three rules you can always fall back on if you're not sure what to do with a line. So we have just done everything on the monthly time frame. Now we've gotten as close as we can to real-time price action. Now it's our indication to move to the weekly. Now it's time to move down. Now you can see some things look a little bit wonky. It's because what I told you before, we're getting a little bit more precise now. Now we're seeing a little bit more information, so we just need to go back and clean it up a little bit. Just make some slight adjustments here. We're going to slide that over here. We're going to slide this over here to make sure price is not intersecting. There we go. Same over here. Price was poking through a little bit. There we go. And same for over here. Price was poking through. Perfect. There we go. So we made some slight adjustments. We cleaned up the lines a little bit, but let's continue. Let's keep going. We still need to get as close to real-time price action as we can. All we're doing is tracking the price. If you guys hunt, I'm a little bit Southern. I've done it before. I don't know if some of you guys are anti-hunting, but it's the only analogy I can think of right now. But you gotta follow tracks. You gotta follow tracks. You gotta get a feel for its environment, what you're looking for. This is kind of what we're doing here with our top-down analysis. We are tracking the price, trying to understand its movement, and taking in this context of what it's done in the past, leading all the way up to the decision that we're going to make in real time when we're ready to trade. So we got to keep going. So if we're going to continue to draw steeper and steeper trend lines and get as close to this price as we can, fall back on the guidelines. If we're drawing a steeper trend line, it has to connect to the last one, and the last point B is the new point A. So this is where this one starts. Capture as many touch points as possible without price intersecting, and make sure we're changing the color here from red to green. So all of our upward trend lines, now this you don't have to do, this is just personal preference. It just makes it easier for me to see. Okay, now for the downward trend line, there was nothing additional that we could do. When we moved from the monthly to the weekly, we saw an extra trend line that we could draw for our upward trend lines. For our downward trend lines, there's nothing more we can do because we got pretty darn close to where the price is at now. But we got to keep going. We've got to work our way all the way to the 1 hour time frame. Or if you are a lower time frame trader, you've got to work your way all the way down to your designated time frame where you decide to trade, where you want to trade. It doesn't have to be the 1 hour. You can continue. But it's time to move from the weekly. Let's go to the daily. Now you can see we need to make some slight adjustments here. Not too crazy though. This just needs to be adjusted there. There we go. And this needs to scoot here. Perfect. Now we need to keep coming in closer. So there is more trend lines to be drawn. Also, if you guys ever find your chart kind of looking wonky or something like that, there is a reset button here. Super helpful. Really just puts you where you need to be. Now I'm going to zoom us in a little bit here with the zoom in button. Now let's come in with a steeper trend line. All we got to do is fall back on those guidelines. What do? If we want to come in with another trend line, it has to connect to the last one. Okay, so that helps me identify where do I start. Previous trend line's point B is new point A. So it starts here and then it ends here. I captured as many touch points as I can, not many, but the main guideline here is it can't intersect. So at one point, this line was correct. This line was able to capture 1, 2, almost 3 touch points here. Actually, this is a touch point here. 1, 2, 3, almost 4. So lots of touch points here on this line. But the fact that price has already crossed through or broken through, it's no longer relevant to us. It's not going to help us make a decision on when to trade or what position to take because it's already broken through. So it was valid at one point until price crossed. So that's why we need to take this line and move it here. So just continue to use those rules and those guidelines to help you when you're unsure where to draw that line. Now we can finally draw one more steeper downward trend line. This needs to adjust ever so slightly. My mouse is just struggling. There we go. Now we can finally draw another downward trend line. It's the only one that we've got so far. We've had one singular trend line to draw on Bitcoin. Now we can finally see a steeper area to draw it. Previous point B is new point A. And capture as many touch points as possible without price intersecting. That's as far as we can go. I'm going to change the color. Boom. All right, we've gotten as close to real-time price action. That is our indication. We can continue the top-down analysis. So we've done our chart analysis on the monthly. We've done our chart analysis on the weekly. We've done our chart analysis on the daily. Let's move to the 4-hour time frame. Now, we got real wonky with the lines here. So now we need to go back and make some adjustments. Now we're seeing so much more information. Before, here on the daily, it was more of a broad overview. We're seeing each one of these candles is what Bitcoin did in an entire day. Now we're coming in a little bit closer, looking at a little bit more of the nitty gritty. So we need to make some more adjustments. So this line needs to get backed up to here. There we go. And this needs to come back to here. So there we go. Now we can continue our top-down analysis. We need a steeper upward trend line. Here we go. Capture as many touch points as possible. Don't let price intersect. And I'm going to change the color. Previous point B was new point A. Started here, ended here. Now we're going to make it to our final destination here for tonight's class. Now you don't have to stop here. You don't have to be a 1-hour trader. You can trade the 30-minute, you can trade the 15-minute, you can trade the 10-minute, you can trade the 5-minute. But in order to trade those time frames, you have to continue this top-down analysis. So you can't go from the 1 hour and skip right over to the 5-minute. You got to continue this process. Continue tracking the price, drawing your trend lines on the 1 hour. Then once you've gotten as close to real-time price action, do it on the 30-minute, do it on the 15, the 10, then leading all the way up to the 5, so that every line has higher time frame context. And it leads all the way up to the decision that you're going to make or the time frame that you're going to trade in. So I need to make some slide adjustments here again. Boom, boom, boom. That looks good. I'm going to hit the reset button. Perfect. And I need to adjust this line ever so slightly. Nothing crazy. Now, we've made it to the 1 hour time frame. Why did we not allow price to intersect? So this is where it comes together. This is where the strategy comes into play. So we've got the system to allow us to do the research on the instrument, to kind of track the price, to study it, to see what it's done, and to allow what it's done in the past in the higher time frames to give us a better idea or to give us context leading all the way up to where the price is at now. It gives us information. It's like instead of making guess, we've got an educated guess, or we've got data behind it. We've got past proof behind it. So why do we not let the price intersect when we do this top-down analysis? Now, for everyone that was writing notes, the top-down analysis is what you do anytime you trade a new instrument, anytime you trade anything new. You do this entire top-down analysis, and then you work your way to the designated time frame that you're ready to trade in. So you follow the same steps, top down, work your way down. So that's monthly, weekly, daily, 4 hour, 1 hour. If you continue to trade lower, write those different time frames down, and then make sure you follow all 3 guidelines. Let's see if I can do the guidelines this time. Every trend line has to connect, price cannot intersect, and you try to capture as many touch points as possible. So those 3 guidelines. Now, once you have done that and you have made it to your trading time frame that you have committed to or dedicated to trading. Now remember, we went over the 1-1-1 rule. You got to pick one time frame. So you got to commit. We've got one instrument, we're trading Bitcoin here. We've got one strategy that I'm about to teach you now, and then we need one time frame. You got to commit to the one time frame. Now, when it comes to the strategy, how do we know when to enter Bitcoin? And how do we know what position to take? How do we know if it's going to be a long position or a short position? And how do we know when? The coolest part about this strategy is, if you guys are taking notes, this is a price action based strategy. So this means that we make our decisions purely based on what the price does. We react to the price and we do no predicting. We're not trying to predict what the price is doing. So we don't have to guess. We don't have to go do research to see what this guy's thinking or what that guy's thinking or what the new product for X, Y, and Z company is, or who's the new CEO for this company. None of that. This is a purely price action based strategy, which is so cool. This just is us reacting to price. What is the price doing, and how can it tell us when to get in and what position to take? That is why we make sure that we don't allow price to intersect, because once it does intersect, then we know. So I want to go through a few scenarios with you guys. Now, what's very cool is the price of Bitcoin is here right now. If we can get priced across, it'll actually give us an idea in real time here. But I want to walk you guys through some scenarios. How do we allow the price to tell us when to get in and what position to take? So let me walk you guys through it. But we have just completed our top-down analysis. Now it is strategy. Now it's entry criteria, trade management, and exit criteria. So if you guys want to write that down while I'm taking a sip of water. All right, I'm going to use something called a path tool to help us go through some scenarios or some examples here. So it just allows me to like pretend like I'm the price. So I'm just going to be using this tool here. Okay. So why did we make sure that price did not intersect? And it is because when the price does intersect, we need to pay attention. Now, for those of you guys that are taking notes, I need you to write down two things. One is action line, and the other one is safety line. Action line, safety line. I need you to write those two things down. They're going to be the most important pieces of this strategy. Action line, safety line, outside of top down analysis. Now, I'll go over what action line means in just a moment and safety line. But let's say that the price of Bitcoin does something like this. We'll say it continue. We've got a little upward candle here. Let's say that the price continues up. It's coming up a little bit. It's coming down a little bit. Maybe we get into a little wedgie here. We're just kind of bouncing around. And then let's say the price of Bitcoin does this. Boom. Okay. Finally, one of the lines have broken. Price has intersected or poked through or broken through one of our lines. Now it gets a name. Before, and the view that we're looking at now, this view that we're looking at right now, these are just lines. We've got bullish lines, bearish lines, upward trend lines, downward trend lines, green trend lines, red trend lines. That's it. We could just describe them. They don't have a name yet. So it's not until price reacts to these lines that it gets its name. So when the price of Bitcoin intersects, maybe it bounced around a little bit, and then boom, it finally breaks through. Once price breaks through, now we finally get to name that line. The line gets a name because price reacted to it. That leads us to the first thing we wrote down, action line. So if you want to write down the definition to action line, the action line is the line that price reacted to. And I say reacted to because there's a few different ways it could have reacted. It could have bounced off of it or it could have broken through it. But for this scenario tonight, we're going to write down the action line is the line that price broke. The line that the price intersected is the action line. So that means this downward red trend line now has a name. It's not a downward red trend line. It is an action line. Now, what does action line mean? It means, one, it's the line that got intersected. We can describe it. But what do we do with that line? And it, remember, I told you guys these terms are very literal. It means to take action. It is now time to place a trade to get into a position. So now we know when. Did we know that the price of Bitcoin was going to break at 1 p.m. on Thursday, May 28th? No, we didn't. We weren't going to try to predict that. That was just simply what the price did. So we reacted. The price told us when to take action, when to get in. Okay, so we've got the when down for a criteria. But now, what position do we take? How do we know if we're taking a long position or a short position? If we're placing a buy or a sell, how do we know? It is going to be dependent on which line gets broken. If a downward trend line gets broken, we take buy orders. We are anticipating that the price is going to push higher because the price is showing us that it has just violated the downward trend that it was following along. We had a point A, we had a point B, it was moving lower and lower and lower, amazing, and now it's not. Now it violated the downward trend line. This is our first indication that we may no longer be trending down. So we're anticipating that the price is going to go higher, go up, so we place buy orders. Now let's say a different scenario happens, something like this. Instead, if something like this happens, now our action line is the upward green trend line. Why? Because the upward green trend line is the one that got broken. Now in this scenario, the price broke at 8 p.m. on Thursday, May 28th. Did we know that? No. We don't guess. We're not going to guess when to get in. I got girlfriend brain and my brain already ain't working today. So the last thing I want to have to do is guess when to get in. So the price is going to tell me when it's time to take my position so that I don't have to guess. I don't have to predict. I'm just reacting to what the price is doing. So the price breaks the upward trend line. That's telling me when to get in. Depending on which line gets broken is going to tell me what position to take. Do I take a long position or a short position? Do I place a buy order or a sell order? In this next scenario, this would be a sell order because the price violated the upward trend line that it was respecting. So this is our indication that price is no longer trending up, it is trending down. Price is violating the upward trend line. Now, we know what an action line is. So we went through two scenarios or two examples of an action line, one based on the upward trend line getting broken and one based on the downward trend line getting broken. What is the safety line and where does it come into play? How does it help us? So we know the action line is our entry criteria. As soon as price violates, we know when and we know what position to take. There we go. We got our entry criteria. Now, how do we manage the trade and how do we know when to get out? Coolest thing, we also don't have to guess that either. We're going to allow the price to tell us exactly when to get out and how long to be in this trade and how much profit we're going to get to, or potentially how much of a loss, or if this is just going to be a break even. So the coolest part is we're just simply following the price. We're reacting to price. There is no guessing here. It's the coolest thing. I think this is one thing that I absolutely freaking love about this strategy is that it is just simply reacting to what the price is doing. There is no prediction. There's no magic globe ball that I'm trying to rub and guess and see the future. Like I just react to what the price does. 100% can have girlfriend brain. So, which I have right now. So let's say that we'll go with this scenario here. The price of Bitcoin violates this upward trend line. We now have an action line. Action line is the upward green trend line. For those that wrote down the two terms, action line and safety line, now we can write down something for safety line. The safety line is always going to be the opposing trend line to the action line. And what does that mean? Literally just the opposite. It's the opposite line. If you want to write that, that's even easier. It's opposite op of the action line. It's action lines op, actually. I'm thinking of that Drake song, and I ain't gonna say it, I ain't gonna do it. That's what I'm thinking of. So we got our downward trend line. As soon as price breaks one of the lines, so remember before, I just got to do a quick overview. Before price breaks or reacts to these lines, they're just lines. It's just upward, downward, green, red, bullish, bearish. As soon as price reacts to these lines, then they get names. As soon as price breaks a line, we've got an action. Automatically, we get a safety line too. We know the action, it's the one that got broken. The opposite line is immediately the safety line. The safety line is always going to be the opposite trend line, the opposing trend line. Now, what does that mean and how does it actually keep us safe? One cool thing, if you guys know, SL is the acronym for safety line, and it also is the acronym for stop loss. So if you know, you know. For those that typed in 2 in the chat, you guys already know. For the ones, this is just the line keeping us safe. This safety line, think of it like our risk management. It's telling us if we're going to either take a loss on this trade, if we're going to break even, or if we're going to be able to close this in profit, all based on how the price reacts to the safety line. The safety line is going to keep us in our trade, help us with our trade management, and it's also going to tell us when to exit our trade. So let's say that we know exactly when to get in and we know what position to take. I'm going to use a little emoji here. So we know we're placing a sell order. We're taking a short position here in Bitcoin because price broke the action line and because it broke an upward line. So we know when and we know what position. Short position here in Bitcoin. Now, how long are we going to stay in and how does this trade play out? How do we know when to get out? So let's go through every example. Let's go through an example of a loss. Let's go through an example of a break-even trade, and then let's go through an example of a winner. If you get into your position and the price of Bitcoin does something like this, maybe you're making a little bit of money, you're feeling good, you're like, yeah, I got in, I'm making money, feels good, and then boom, you're losing a little bit of money. Okay, that doesn't feel good. I just gave up all those profits, and you're back to break even. Okay, cool. And then boom, price breaks, which this happens all the time. We're going to go through every one of these scenarios, but I want you guys to be kind of prepared for every aspect or every different outcome. So let's say we get into a position. One, price ebbs and flows all the time. Look at this. The price of Bitcoin ebbs and flows. We got a nice push to the downside, then some sideways movement, continues down, then it pulls back. Then it comes down, then it pulls back. Then it goes down even harder, then it pulled back all the way up. So price ebbs and flows. So we just got to be prepared for that. So if something like this happens where we got a little bit of sideways movement, it comes down and then it pulls back. This is a scenario of a loss. Why? We got into our position here. We were making money. The price was moving in our favor. Price pulled back. We're losing money now. Okay. And it's back. Now we're break even. Okay. Amazing. Feeling good. And then boom, price broke the safety line. Did we know that the price of Bitcoin was going to break our safety line at 9 a.m. on Saturday, May 30th? No, we did not. So we're simply just allowing the price to either give us what we can get for profit wise, or we're going to take a loss because the price didn't move in our favor. This is where we know when to exit. When price violates, and it's very similar. So we know when to get in when price violates one of the lines, which becomes our action line. And then when we get out is also when price violates the safety line. So it's just telling us again that, okay, we thought the price of Bitcoin was going to trend along this downward trend line. We thought it was going to follow along it. It was going to respect it, and it didn't. This is our first indication that the price of Bitcoin violated the downward trend line and that we may no longer be trending down. I need to go ahead and close my position now in case it really goes, in case this thing continues going back up. So we know exactly when to close our position and we don't have to guess. So now let's go over a few other scenarios in case that one didn't click. So we're going to go over the same short position. We get in. Now, what would we do if the price of Bitcoin does something like this? All right, we'll say that we get in and immediately goes against us. We're like, oh, man, was that the right decision? Oh, good. Okay, we're feeling good. All right, we're back to break even. Oh, we're making money. We're feeling good. Oh, we're back to break even. And we're feeling good. And boom. All right, price broke the safety line. This is a scenario where if the price kind of puttered out a little bit, moved sideways, and then broke our safety line, we would close this break even. This would be what a break even trade looks like. So price still ebbed and flowed, moved against us. We lost some money. We were making money. We gave it back, losing, break even, blah, 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 blah. Boom. Now we know. So in this scenario, it was Sunday, May 30th at 8 p.m. that we closed our position. Did we know the price of Bitcoin was going to violate the downward trend line then? No, we're not predicting. We're just allowing the price to tell us when to get in and when to get out. So this would be an example or a scenario of a break-even trade. You closed your position, you didn't make any money. That's something to be proud of if I'm being so for real. Now let's go over the last example here. Oh, we're keeping that. Let's go over the last example of a profit. If the price continues in our favor, what does it look like? What does it look like to close a trade in profit based on price broke this line? We got an action line. We're in a short position. What's got to happen? Let's say we get in, we're making money. It pulls back. We're back to break even. It pulls back. It's down. Okay, great. It's moving up. We're giving some profit up. We're feeling good. It's coming back up, feeling good, and then boom. Let's say just something like this happens. If the price of Bitcoin does something like this, where lots of ebb and flow, we're seeing dollars in our pocket and then out of our pocket, and then no dollars, and then some dollars subtracted, and then we see some dollars. So it's just price does this all the time. Get used to the ebb and flow, the seeing red, seeing green, seeing profit, seeing break even, seeing a loss. Price will ebb and flow. In this scenario, the price respected our safety line for a longer amount of time, and we didn't close our trade until, for example, June 4th at 6 a.m. I'm going to use our little emoji, and boom, we closed our trade. This would be an example of a profitable trade. We sold, and then we bought here, closed our position. Now I'm going to go over one more scenario with you guys in long positions just to really solidify this, just to really lock it in. But we're preparing ourselves for any case scenario here. But this is what it looks like to see the trade management, the entry criteria, and the exit criteria, to see price violate a line for us to know what to do because it's violating it. And that's also a weird word, but it truly is. It's disrespecting the trend line. Violating, disrespecting, whatever you want to call it. Intersecting, but it's breaking the line. It's breaking the line. Now we know what to do. We know when to do it. We know how long to stay in the trade. We don't have to guess. We don't know, and we don't care. We're just allowing the price to tell us exactly what to do. But I'm going to go over some scenarios of some long positions instead this time. So we're going to clean up our chart. Here we go. Here we go. This needs to be cleaned up a little bit. Yeah, there we go. Okay. Scenario number 2. Let's reset the chart. Scoot it over. Whoops. I need you to quit. There we go. All right, scooting this chart back over. Now let's go over scenario number 2, long positions. So let's say the price of Bitcoin continues up. Let's say that it's finally, the dip has dipped and like Bitcoin's coming up. Let's say it comes up a little bit, it comes down a little bit, it ebbs and flows. It does its thing. Maybe it's moving a little bit sideways, and then boom, this happens. Now I'm going to pull up the chat and I'm going to test you guys just to make sure we all got it. So give me a second. I haven't been looking at the chat the whole time, but here we go. All right. So you already guessed it. Yes. So one, we're going to take a long position, but why? Why are we even getting into a position? Boom. Yes. Mercedes. It's because price broke an action line. Correct. Action line means take action. Time to take action here. Price broke the downward trend line. That means to take action. So I want to go ahead and throw my emoji on here. Now, how do we know if it's a long position or a short position? How do we know? How do I know which? Do I place a buy order or a sell order? Correct, Ty. Yes. Does anybody know why? Why are we placing the buy order? Boom. Yes. Moody guessed it. Yes, yes, yes. Correct. Because the downward trend line was broken. So we're placing a buy order here. All right. Now we have an action line. Amazing. Which one is our safety line? Correct. Yes, yes, yes. Safety line is green. So action line was the line that got broken. That means it automatically gets a name. As soon as price breaks the line, it has a name now. And which means as soon as price violates one line, the other one automatically gets a name too. So both get a name automatically. We get an action line and a safety line as soon as price violates. So we've got a downward trend line, got broken. The opposing trend line, the opposite trend line is our safety line. As long as the price can respect this line, we're literally safe in our trade. That's why it has this term. As long as the price respects this line, even if it pulls back a little bit, maybe we're back to break even, it pulls back. As long as Bitcoin can just respect this upward trend, we are safe, we are happy, we're making money in our trade. This is why this is called a safety line. We're anticipating that this line, the safety line, is going to be the new trend. We're getting in on the trend. The trend is your friend. That's what we're trying to do here. So let's say that we know when to get in. We got into our position because we got an action line. The opposing trend line is the safety line. That's how long we're going to stay in. As soon as price violates, we know when to close this trade. So let's go over a scenario of a losing trade. We'll get that one out of the way. Let's say we get into our position. Let's go over one of the most basic and common scenarios that happens. Let's say we get into our position and then boom. Dude, immediately, price moves against us. Let's say price moves against us and then breaks the upward trend line. This right here is a scenario of a loss. A lot of people would call this a fake out, but this is absolutely common, yes. We get into a position, we got an action line, and then boom, price moves against us. We took a loss in this scenario. But this is also making sure that our loss is not tangible. It's manageable. This loss is manageable. And this is where position size comes into play. We don't want to go all in. Yes, we want to keep this minimal. We want to keep this loss manageable and minimal. That's where position size comes into play. Because this will happen on a regular basis. You'll get stopped out, you'll get faked out. So as soon as price violates the safety line, this happened immediately. As soon as we got in, boom, closing our trade, loss. Now let's say we're going to go over a break-even trade. So let's say we get into our position, immediately pulls back, we're losing money, we're not feeling good. Oh, okay, but great, we're back to break even. Oh no, we're losing money. Okay, we're back to break even. We're losing money. Wow, this really feels like it's not going anywhere. Oh, maybe we're making money now. We're coming down, not really going much of anywhere, and then boom, finally it breaks. We'll say that doesn't really work. Let me keep going. I want to give you guys a real scenario of what break even would look like, what break even would have to look like, or what price would have to do in order for this to be break even. Okay, keep going, keep going, keep going. Amazing. And boom, there we go. If price did something like this, where you were in it for a while, you were like, man, price is moving sideways, it's consolidating. I'm losing money, back to break even, losing money, back to break even, losing money. Okay, finally making money. This is a lot of ebb and flow here. But if the price of Bitcoin did something similar to this, where it finally broke the safety line, over here, on June 1st, 4 p.m., which we don't know that. We never guessed it. We just are simply reacting to what the price does. So here, the price finally violated the line and we closed break even. So that means we would close our position, trade's over. Didn't make any money. We spent a lot of time being in the trade, but not much of anything happened, which still, guys, keep in mind, break even trades are something to be so proud of. Remember we went over that stat, 90, 90, 90? Most traders can't even do that. Okay, now let's go over the scenario of a profitable trade. What would it look like to have the price of Bitcoin do something similar to this, action line, safety line, and then close this trade for a profit? All right, we get in. Let's say price moves back immediately against us. All right, we're feeling good. Okay. Maybe let's say that we're in some volatile markets. Things are just like ripping and rolling. It's moving fast. Boom, boom, boom. It's still respecting the safety line. And then let's say something like this happens, breaks the safety line. But now let's say that this happens at 2 a.m. on June 6th. Did we know? No. But this right here would be an example of a profitable trade. We made money in this scenario. We entered here. We exited here. So this is what it looks like to know when to get in. We're not guessing. Know what position to take, how to manage your trade. How long do we stay in the trade for? We don't know. We're allowing the price to dictate that. We're allowing the price to tell us when to get in and when to get out. The safety line is the stop loss. SL, think of it like that. SL, safety line, SL, stop loss. That is our risk management. That's telling us when to close our trade. That's also going to tell us if we're closing for profit, if we are closing break even, or if we are closing for a loss, if this is going to be an initial loss. So this right here is an example of taking a buy order when say the price of Bitcoin breaks the action line, it respects the safety line, and then we get to close this one in a profit. This really, dude, Vito, I'm telling you, this is how I've made sense of the markets. It makes sense to me. Like, I'm just reacting to price. I'm just following the price. Now, what's cool is I did some pretend scenarios here. You can make your decisions based on real-time price action. Now, we're in a 1-hour time frame, so as we saw, days would have to go by to see this through. But this is what I do every single day. I'm reacting to price. I'm following price. I'm not guessing. I'm not predicting. I am reacting to price. I've got my action lines and I've got my safety lines. It's one of the coolest ways to understand the markets, or to be able to turn such a complicated, complex thing into like a very understandable, digestible, tangible, relatable thing. So this is how I've interpreted the markets. It's done very well for me. I want to do a quick pulse check to see where everyone's at. So give me just a moment here. Take a sip of water. I'm going to do a pulse check, see how you guys are feeling, if it's resonating. So give me just a moment here. Also, guys, save questions for the end. We are going to do Q&As at the end, if my brain can handle it. All right. Okay, it's resonating. I'll take it. All right, it's resonating. Okay, so we went over our trend lines. We went over our top-down analysis. We went over our action line, safety line. We went over our entry criteria, our trade management, and our exit criteria. Now, I am going to skip over how to journal your trades today. Normally I'm on my A game and I can run through things pretty quick. I'm moving really slow today and my brain feels like a big pile of mush. So we're going to skip through journaling trades today. But I will at least provide you with I'll provide you guys with a video attachment to the playbook. So if you guys could remind me to attach my TradeZella video on YouTube to the playbook, just so that everybody has it. I don't want to feel like I'm skimping you guys of information. I still want you guys to have all the info. So give me just one moment here. We're going to skip the journaling because we don't have time today. And you know what? Actually, we're already hitting our hour and 30 mark. Let me see if we're going to just skip right to Q&A. So give me just a moment here. Got it. I'm just checking in with my team. Everybody's saying skip to Q&A. Well, we've gone over the most important stuff. Let's see. While my brain's still working. So we've gone over the 111 rule, how important, and I'm telling you guys that 111 rule is going to change your life. It may sound cliche and very basic. It will change your life. One time frame, one instrument, one strategy. If you can commit to that 1 hour a day, like you're done. You're good. You're good to go. I gave you guys top down analysis. We went over entry criteria, exit criteria, trade management, action line, safety line. We did our guidelines for the top down analysis. Okay, cool. I think we've gone over all of our things. Before we shift into Q&As for the rest of the session, I did promise you guys if anyone wanted to take advantage of the special announcement that I have for you guys tonight, let me go over that information for you guys tonight, and then we can get into it. So give me one moment here. Oh, am I not even sharing my daggum screen? All right. Here we go. Where are you? Oh, also for everyone that's already typing in questions, I'm going to give you guys an actual place to submit your questions for the Q&As. Zoom has a section, so don't enter them yet. Don't put the questions here yet. I have somewhere for you guys to submit them for me to be a little bit more organized with the Q&A. Dude, my brain can't focus. Where's a window? I'm looking for a window. Makes a better door than a window. Okay, found it. Amazing. There we go. Okay. All right, give me just a moment, guys. Okay, I don't have too much time to spend on this, but I will give you guys the information if you want it. If you don't, totally fine. For those of you guys that did want more information, I saw it in the Q&A section or in the chat section here. So I'm going to give you guys some more information on TLT. And you guys do have the ability to skip the wait list since you guys made it to the masterclass. So there is a benefit of making it to the masterclass, is where you don't have to be on the wait list for TLT. You can just completely skip the line. Okay, so I want to just give you guys a quick introduction. It's going to be the quickest one you've ever heard, to TLT, just to give you guys the information. So what is TLT? TLT is essentially all of the hard lessons that I've learned over the last 11 years into a simple curriculum. It is the exact pathway to guide you guys from the bottom to the mountain of your goals. Now, one thing that I do want to make sure is very separated. TLT is not just like, it's not a course. I'm not going to sell you guys a pre-recorded video that was like 5 years ago and is no longer relevant to today. There is a curriculum, though, to where you can understand just the basics, but that's not the meat of the strategy here. So this is a complete step-by-step path to take you guys from where you are now to a sustainable trading career in 6 months. Now, notice that I said path because it's not another course. It is not where someone will just dump information on you. I think one thing that I feel very passionate about how TLT is set up and organized. We're shifting from like your regular average course seller. Somebody's got a pre-recorded video that they're just going to throw at you and be like, okay, this is my strategy. Good luck. Have fun. The information's not the issue here. Like, everybody's got the information. I've got plenty of videos on YouTube. Everybody's got videos on YouTube. You can have a conversation with ChatGPT about really anything. You can learn how to do anything. So it's not information that we're lacking in. It's structure, it's a process, but it's live. It's like, I'm telling you guys, you need to see it done in action. You need to see it live. You need to see real-time price action. You need to see it again and again and again. You need to see, okay, these are where my lines are today. What happens if Bitcoin does this tomorrow? How do I do the same thing tomorrow? And then how do I do the same thing the next day and the next day? So it's the path, it's the structure here, but there's a mega difference. Like we're shifting. So, and also the difference is this is a three-staged program. There's stage one, stage two, stage three, so that you know exactly what to do next. This is the exact system that my uncle taught me and spent years and thousands of dollars refining so that you don't have to. This is a real structured system here. And it's a massive amount of knowledge. I'm trying to do like the math of like my mentor's information that he gave me versus my version of interpreting it for the past 11 years. It's a lot of years. So my mentor was trading for 30 years and I spent 11 years kind of refining and modifying and making it my own. So there's a lot of years behind the information. There's a lot of years behind dumbing it down. And I know that sounds so silly, but I mean, you guys are here and you already understand that like trading is a very intimidating, complex entity, industry. And to be able to actually strip it down to something as simple as this, something as simple as like an action line and a safety line and a top down analysis, but then as simple as that is, how do I see this implemented though, like day after day after day after day? How can I see this be implemented over time? Like I've got the bare bones essentials of it, but like I need to see this done every single day. So that means you're meeting daily, every day. You'll have live calls with myself and my team and my coaches that have gone through the same program, applied the same thing that you're going to learn, and are profitable. That's the key thing here. Now, if we were to meet for 1 hour a day, the cost of my time would be invaluable and would be of your time would be invaluable. So we are meeting every single day. Now you'll have live calls with me and my team and coaches. We've gone through the exact, okay, got it. Lovely. I'm repeating myself here. Now, this is the live session. I'm going to skip through. I don't have time to go through this. I love you guys to death, but the brain is not braining tonight. Tons of stuff in TLT. I'm going to skim through as fast as I can. Team, if you guys want to just know that the notes have been duplicated. So we've got the curriculum here, which is like the starting point. Then we've got like the actual daily sessions. It says weekly, it's daily. We've got something every single day here for you. We've got ICU rooms where it's a one-on-one chat support. We've got a senior coach. Lots of information. Trade review station here. Community access. And we didn't get to go over TradeZella today, but it is a platform. It's a program where you can journal your trades, you can backtest your trades. It also has something called mentor mode where myself and my team can see everything you're doing. Every trade that you place, if you go until, if you take a big loss, we get to see everything. But it's truly what can hold you accountable. So we've got the curriculum, the daily private sessions, should not say weekly, should say daily. We've got live classes, community access, ICU rooms, trade review station, and 12 months free of TradeZella. All of this is in TLT. How much do we need to invest? I'm going to pause the chat for a moment. I'm going to give you guys the link to apply to book your call. I'm going to move into Q&A, but I want to give you guys instructions to the Q&A. So in order to submit your questions, which I do have time for now and the brain is here, we're going to get as many as I can out. But remember, give me grace, guys. It ain't my night tonight. And I'm usually so much more on my shiz, but I'm not tonight. So I'm going to pause the chat for those of you guys that want to apply in the link here in the chat. And then for those of you guys that want to submit questions for the Q&A, Zoom has a Q&A submission section. I need you guys to go to that section specifically to submit your questions so that I can go through and answer, so that I can just have a little bit more of a procedure or process here. All right, so give me just a moment here. Let's move into Q&A. What a night, y'all. What a night. What a night. I mean, we made it this far. So we made it this far. Oh, it just ain't my day. I was considering canceling tonight, but I know you guys, like some of you guys signed up for this and committed your time a week ago, and I didn't want to be disrespectful of that, but I knew ahead of time that I wasn't going to be on my A game. So I don't know if it would have been better to cancel or better to just go through with it. I'm not sure. And if this is some of you guys' first impression of me, it's a bummer. It's not my best, and I've done a lot better, but that's what we've got today. All right, let's go through some Q&As. And I really do, I take a lot of pride and I take this seriously, the information that I give here, because I feel like it's my responsibility to shed a light on trading. I'm also one of the very few female traders in the space. So I've got a lot on my back. So like I'm bringing the female traders with me. I got a lot that I'm trying to represent. And a lot of barriers that I'm trying to break in trading. So a lot of pressure, and I take it very seriously. So I'm also very hard on myself too. So just with that being said, some of you guys are like, oh no, you did fine. I don't know what you're talking about. I take my work very seriously, and the way that I convey trading and my strategy and my reputation and the light that trading has had, or the words aren't working. We're done. Going into Q&A. Here we go. More Q&A session. All right, we're starting from the top. Here we go, as many as we can. All right, Dawn wants to know, after you've closed the trade and want to take a new trade, do you update the top 10 analysis? So yes, Dawn, you think of the top 10 analysis as like this like ever flowing. Price is always going to ebb and flow. It's always going to move. We're always going to have these higher highs, these lower lows. So we've got to, there's a word that I'm looking for that I can't freaking think of. It's not maintenance. I mean, I guess it is. How would you maintain your lines on a daily basis? And it would be essentially going back to those rules. If you want to place a new trade, you adjust your lines. Anything that needs to be deleted, you can delete. Any new lines that you need to draw. But remember to go back to those guidelines. If you're following your guidelines, you're making sure price hasn't intersected. You've got your top 10 analysis already done. Then yes, that is how you would move on to your next trade. So hopefully that answers your question, Dawn. And also, guys, give me grace. My brain just ain't doing it. All right, next one wants to know. Someone said, I guess it was worth waking up in the middle of the night. Thank you for that. I guess I'll take it, dude. I could use the reassurance. That really helped. Okay, what else do we got? When trading futures, this one's from Ty. When trading futures, should we buy or sell market or limit orders? What's the difference? So the market order is like, get me in right here, right now. Whatever the market is trading at, whatever the market price is, I want it right here, right now. The limit order is you telling the market what price you want to get in at. I do think that market orders are best, especially for this strategy. It doesn't mean that one is right or wrong, and there's other strategies that implement other ways to get into your position. But I will say the market orders are the best for this strategy. Get me in right here, right now. Limit orders, the only nuance with limit orders is price might never make it to where you wanted it to get you in at. So like, let's say the price of Bitcoin's moving down and you want to get like a really good entry. You want it to come all the way down to 70,000 before you get in. There is a potential or a possibility that the price of Bitcoin never makes it down to 70, so you never get in to your position. So that's the difference between limit and market orders. Market orders get me in right here, right now, what the market is trading at, what the market price is at now. Limit order, you tell the market what price you want to get in at, if it hits that. That's a great question, Ty. All righty, let's keep going. Okay, great. Thank you. We had some encouragement. This was a wonderful session. Thank you. All right. Does make my night. Thank you. Okay. Shandi wants to know, what is the best instrument and time frame to trade on? There are a lot of different combinations. There's not going to be a secret sauce, because otherwise everybody would be trading the same thing at the same time. It is just a matter of what time you can trade, what time you can dedicate to like sitting in front of the charts, and personal preference, risk tolerance. So there isn't like a perfect combination of this one instrument is best at this time frame. The hardest part, so the strategy itself is very simple. One of the harder parts is finding like the perfect combination of like, okay, what instrument do I trade on what time frame and what setup do I use? So those are like one of the hardest parts, is kind of like it's the science experiment that I talked about. Testing things out, doing that science experiment to find out which one is yours. Okay, let's keep going. So there isn't a secret time frame. Okay, let's keep going. So Brianna wants to know what broker I trade with and how much money should I start with. So I trade with TradeStation. I don't know if it's relevant to you. You don't have to use TradeStation. It's just what I've always used. TradeStation is a regulated futures and equities broker in the US. Highly regulated. I trust my money in there, but they have a minimum of like $3,000 to $5,000 if you want to open an account. So that is a personal funded account. That is if you want to open your own account. There is something called a prop firm, where you don't have to risk any of your own money. You don't have to open up a brokerage. You will pass an evaluation. You essentially have to take a test to prove to this prop firm that you're a good trader. Once you pass the test, then they get access to capital. They give you access to capital. And now you are a funded trader with trading with somebody else's money. And if you make profits on somebody else's money, you get to split the profits. And that's what a prop firm is. And that's kind of the way the industry has shifted. That's why it's so easy to get into trading nowadays, because it's a very low barrier to entry, cost between like 50 to $100 to take an evaluation to get access to funded capital. So, Brianna, what I would suggest to you is just having a simple ChatGPT conversation about the differences between a prop firm and a personal funded account. But my specific brokerage, if you were asking, is TradeStation. Okay, let's keep going. All right. Mabel wants to know, do I have a Discord? TLT is located in a program called Circle. It's so much better than Discord, just because Discord is very easily like, there's so many scammers, there's people trying to send you DMs and asking you for money. Circle is just so much better. It's easier to regulate and scammers can't get in there. So we use something called Circle for TLT. All right. Let's see what else. John wants to know, how do you identify fake outs? So, one thing, John, that I will say is we're never going to be able to predict a fake out. So, very similarly to where we don't have to predict when to get in and we don't have to guess what position, we also are never going to be able to predict a fake out. But there are some things that we can do to help decrease the chances of us getting caught in a fake out, just making us getting caught in a fake out less likely, but we're never going to be able to predict a fake out. But some things that I like to do to help me avoid fake outs, or at least to decrease the probability of getting caught into one, is just to create a little bit of a layer of separation between you and getting into every position, you and getting into every trade, you and getting into every trade. The likelihood of you getting caught in a lot of fake outs are pretty high if you're taking every single setup. So what can we do to separate you in every single setup and you in a fake out? It would be something like, instead of getting in as soon as the price breaks the line, wait for the candle to close. So price is breaking a line, we have an action line, but wait 5 more minutes just to make sure it's still crossed the safety line. I'm sorry. Wait 5 more minutes just to make sure it has still crossed the action line. That one small thing in itself is creating one layer of separation and decreasing the likelihood of you getting stuck in a fake out. So it could be something as simple as that. But it's just essentially creating layers between you and every single entry. That's a great question, John. All right. So, Adriana wants to know, can I use this on micro contracts? I trade micros on the futures time frame, or on the futures market on a 5-minute time frame. Yeah, exactly. This strategy is purely price action. So as long as you can see price movement on a chart, this strategy can be implemented. So that means it could be crypto, it could be micros, it could be minis in the futures market, it could be equities, stocks, forex, any instrument. This strategy can be applied because it's purely based on price action. As long as you can draw a line and find a trend, you can apply this strategy to it. So yes, essentially, Adriana, you can apply this to micro contracts. All right, great question too. Lucy wants to know, is there any literature that you read on the daily to find out what to buy? Absolutely not. No, no, no. It that creates it's a different strategy. Um, since this is purely price action, I like to allow the price to tell me. And a great example of that is the way that my hold on, I gotta text family and tell them I'm not done. No. Okay. A great example of that is I've been trading crude for the past, like, I think 2 weeks now. I think I've been in a trade for maybe it's been a week, maybe 2 weeks. To be honest, I don't remember at this moment in time. I also got stuck in a contract switch, so I was in original short position that I had to close anyways, but then re-enter later. So I've been in this short position for crude for a long time. But if I trade purely based on price action, I have no other influences. Nothing else is telling me anything. And there are many instances, even in this specific trade, where some headlines will come out, some news will come out, this will be published. This person said this person said this, and it completely contradicts what the price is doing. Not helpful. It's just one other thing where if you just follow price and react to price, that's all you need. Now, sure, does sometimes when the headlines align with what the price action is doing makes you feel more confident? Yeah, absolutely. But there's many times where it contradicts or does the opposite, and then there are times where it is in sync. So if you can keep it to just purely price action, that's when you know when to get in and what position to take. Now, Lucy said what to buy. Maybe that question is like, well, how do I know what to trade? And that is just you going back through that science experiment. Like, keep the variables small. Maybe I'm going to try the same time frame, the same strategy, and the only thing that I'm going to switch up is the instrument. I'm going to try gold, oil, and the Nasdaq. So I'm going to try the same strategy on all threes in the same time frame on all three, just to see which one I like better or which one I do better at. So that would just be a matter of trial and error. Anonymous wants to know what's wrong with your health. Health is fine. It was just a weird day. I'm not sick or anything. My brain is fried. But thank you for asking, I guess. All right. Next thing is, okay, Chris wants to know what is the best time frame for busy people who keep missing their setups. Okay, that's a valid question. Very fair. There's two options and they're two extremes, but this you'll just have to decide if like this makes sense for you or not. So if you are super busy and you can't focus, throughout the day, but let's say that you do get like a 1 hour of free time and you're like, okay, I've got this 1 hour. I need to make this work. I've got 1 hour that I can commit to the charts right now. Let's trade the 5 minute time frame. I think 5 minute time frame, anything lower is just, it's a little bit harder. You're making decisions very quick. I think a 5 minute time frame, if you've got like an hour, 2 hours to commit, is going to be best, or is one option. Then the other option is the complete opposite end of the spectrum, where you can be in a trade for days. Like, you don't have to just have that 1 hour dedicated. If you've got a moment where you're like, okay, I'm trading on a 1 hour time frame, maybe even a 4 hour time frame, so that lots of time can go by in between. Lots of time. You can have a day go by before you see a setup, or 2 days go by before you see a setup. And then when you finally do, all right, I can get into my position. And then you're going to have to yet wait another day and another day to actually see it through or to close that trade. So that one requires a little bit more time to go by, but like less time actually on the charts. So you're just letting your action line get broken, but you're on a higher time frame. So more time has to go by. So I don't think one is better than the other. You just have to think of yourself like, okay, if I am kind of doing my own thing, I'm very busy, but if my phone goes off and like that alert goes off, can I take this trade? Or I'm not even able to do something like that. I have to just sit down for my 1 hour that I have, even though I'm super busy. I'll carve out 1 hour that I can trade right here. So then I'm in it when I'm in it. And then when my hour is over, I'm closed, my trades are closed, and then I'm on to the next thing. So it's just depending on like which one you can handle. Can you handle a trade over multiple days? Or do you just need to have that one dedicated hour and then you're all in, you're all out, not trade wise, but like your mental focus. And then you don't have to think about it anymore after that. All right, let's keep going. I'm gonna do just a few more minutes. We'll go all the way up until 7 p.m. for some more questions. Okay, Crystal wants to know, how do we determine the time frame to make the trade? So it's gonna be personal preference, just like I mentioned, the 5 minute time frame versus the 4 hour, just to see which one you like better. Some people like making more decisions throughout the day, but then having that peace of mind knowing that I'm done trading for the day. All my trades are closed. I traded on a 5 minute time frame. I get to go to sleep with not thinking in the back of my mind that I got a trade open. So it's just personal preference. Can you handle having trades open for multiple days? But that's going to come down to paper trading. And that is sim trading, demo trading, practicing on a simulated account or a demo account or a paper account where the money that you invest is fake, but the chart or the price action is real. So you're trading what the markets are actually doing, but you're doing it with fake money. And that's the best way to like test to see what works. So exactly what we did today, try that on a 5 minute time frame, try it on a 1 hour time frame, try it on a 4 hour time frame, and then see which one feels best for you. Which one can you manage better? Do you feel better knowing that like you're done trading for the day in the 5 minute time frame, and when you close your trade, you're just done? You don't have to hold it for like 2, 3 days or a week. You feel better knowing that like all my trades are done at the end of the day, and then I don't have to focus on it anymore. That I can go about my day, do my other things. Or if you do like having your positions open for multiple days and you like being able to take your time on an entry and you like being patient, which not many people do, but if you are more like that, then the higher time frames would suit you. So that's just a matter of testing, which we would have covered in journaling, but we didn't have time today. All right, let's keep going. Let's keep going. Okay, Sarah wants to know before or no, after placing a trade, when do you redraw your trend lines? So when I'm in a trade, I like to keep my lines exactly where they are to remind me exactly why I got into my position, because it's very easy to start seeing things a little bit different and second guessing. So when you're in your trade, it is a great practice to leave the lines where they are. Leave the action line where it is so that you are reminded exactly why you got into that position. Then when you close the trade, then you can go ahead and modify and readjust and make sure that you're following the guidelines and you're capturing as many touch points as possible and price hasn't intersected. So that is my advice for redrawing the lines. Great question, Sarah. All right. Amir wants to know the tick value or the tick value, the dollar per tick value for futures. It's a little bit different for gold, for the indices, for the energies. So a simple either go into your brokerage or just ChatGPT is the best way to do it. Just what is the dollar per tick value for? Now it's going to be different for micros versus minis, but a quick combo with chat. All right, let's keep going. Paul wants to know if this applies to the stock market. Yes, it does. All right, Evan wants to know, does this work on the 5 minute time frame? Yes, it does. Esther wants to know, how do I implement or combine support and resistance? Support and resistance is not the meat of the strategy. It's not the foundation of the strategy, but it does help if you don't want to stay in your trade all the way through the safety line. So it's just like a fallback on, okay, I know where my safety line is, but I don't want to hold for this whole safety line. Like, is it going to take days for the price to break the safety line? Where can I close a little bit sooner? So, Esther, my advice for you on that is to watch a YouTube video that I posted that says support and resistance doesn't work. It's obviously counterintuitive to what you would think you'd be watching. It shows that it works, but how does it work with this strategy in specific? So, Esther, I would recommend that to you. Also, I don't even know if Esther's still here, but if you are, hopefully you got that. All right, let's keep going. Jose wants to know, how do you use the stop loss on your strategy? So think of safety line is the stop loss. The safety line is the stop loss. SL safety line, SL stop loss is the best way to remember that. All right, let's keep going here. Okay. Leonardo, thoughts on trailing stops? Automatic trailing, amazing. And the stop loss essentially is a version of a trailing stop. It moves. It as price progresses or moves along the safety line, it trails along it. So it is a version of a trailing stop. All right, let's keep going. Let's keep going. McCain said, no question, just want to say hi. Hi, McCain. How's it going? All right. Brett says, do you watch your safety lines on the 4 hour time frame or lower? So everything is done on one time frame. That's the part of the 111 rule. You have to commit to one time frame. That means you're staying in that one time frame. Your entries are the same time frame. Your trade management, same time frame. Safety line, same time frame. Everything, same time frame. The only time that you're jumping from time frame to time frame is when you're doing your top